Now we're in crypto summer right now. We started
Nice.
crypto summer in June. We'll be in crypto summer till right after the halving next June. And what is crypto summer? Well, crypto summer is where we slowly accrete back to fair value. Look, we always go above fair value in crypto fall. As we enter into crypto fall next June, then we'll start to get above fair value. Now we'll go from that 50 to 100. And that 50 to 100, it's probably going to happen really fast.
In April 2024, Bitcoin is expected to undergo its fourth halving cycle, after which the number of Bitcoins minted with each block will reduce by 50% from 6.25 Bitcoin to 3.125 Bitcoin. Investment luminary Mark Yusko joins in to share his perspective on Bitcoin's value proposition, asserting that the fair valuation of Bitcoin stands firmly above $50,000. In contrast to conventional fiat currencies, which are issued and controlled by governments and have seen exponential increases in circulation post the 2008 financial crisis and the COVID-19 pandemic, Bitcoin's circulating supply has been meticulously programmed since its inception. Looking ahead to 2024, the upcoming Bitcoin halving is expected to have wide-ranging impacts across the entire crypto market. With every halving, there's a significant tenfold increase in the network's value. Reflecting on the past halving events, we witnessed a progression from 10 to 100, then from 100 to 1,000, and subsequently from 1,000 to 10,000. Now, the trajectory points towards a remarkable leap from 10,000 to 100,000, representing an exponential tenfold growth in the network's value. Yusko's insight into the potential swift surge from $50,000 to a $100,000 fair value is intriguing, relying on historical market patterns and the anticipated influx of capital into the cryptocurrency market. According to the hedge fund veteran, Bitcoin's surge from its yet-to-be-reached fair value could start mid-next year and be primarily driven by two factors. Now, let's focus on the video to explore more. Before we get started, subscribe to the channel and click the bell icon for the latest updates.
Focus on it, but it's not my thing. But the idea that somehow the 4-year cycle is going to go away just doesn't make any sense to me. It's hard-coded into Bitcoin's program, and that's the halving. And so what happens is the halving occurs, and if the price didn't move, what would happen? Most of the miners would go out of business. Think about it. Their electricity costs are fixed. Their machine costs are fixed. And so if suddenly the block rewards get cut in half, if the price doesn't adjust, some of them have to go out of business. So what we have seen in each of the previous cycles is the price doubles. That makes sense. That doubling is a fair value doubling. But what happens is if something goes up a lot quickly, what happens? People get stupid. They start to tumble in. And the way to think about it is after the collapse, right? We all know the crypto winters. So winter is when we have the collapse. And what is a collapse? A collapse is where we fall from craziness, euphoria, back to fair value, but we don't stop at fair value. This is the way bear markets work in any asset. We go right through fair value and we go to washed out levels where no one will ever buy commodities again. No one will ever buy NVIDIA again. No one will ever buy Bitcoin again. Yeah, whatever. And I actually remember being on TV December 2018. We were at 3,200. And the host on CNBC says, don't you think it's going away? Like, no. In fact, we just issued the Morgan Creek Digital Bitcoin Challenge, and we challenged anyone to take the other side. $1 million charity bet like the hedge fund bet with Buffett. I actually even called Warren, and he picked up the phone, and we talked, and he decided not to do it. But we actually had a dialogue back and forth for about a week. Wow. But we couldn't get anybody to take the other side. They took the S&P. We take Bitcoin for the next decade. We got one guy who said he would take it, and his son talked him out of it. But because he was in the asset management business, the son was like, look, there's no upside for us. If we lose, it's bad. If we win, who cares? We're supposed to win. So no one would take it. Now, it's a good thing they didn't, because Bitcoin has crushed the S&P over the last 5 years. I mean, it's not close. But the point is, in crypto, when we go down to this crazy level, And fair value at that time was around $11,000. So at $3,000, really easy to say, you should buy this. And what investors do, they buy things below fair value. And as you start to get above fair value, as we enter into crypto fall next June, then we'll start to get above fair value. Now we'll go from that 50 to 100. And that 50 to 100, it's probably going to happen really fast. Why do I say that? Two reasons. One, that's what history tells us, that FOMO kicks in. But this time we got a massive tailwind. Last time we had GBTC. About $10 billion came into GBTC. We went from 10 to 60 really fast. Then Elon, put out the famous quote, went from 60 to 30 in a heartbeat. And then we went back to 69 because Michael Saylor bailed us out. Well, this time, if fair value is at 50 and we're going to 100, that 50 to 100 candle, I think it's going to be fast. In fact, I even wore my green pants today for the green candle.
As 2024 looms, Mark Yusko's perspectives on Bitcoin and the broader crypto sphere offer a glimpse into what lies ahead. Whether it's the hype around the upcoming halving or the potential approval of the U.S. first spot Bitcoin ETF, the fact is that Bitcoin's price has been on the run for the past few months. On-chain metrics also indicate that 95% of Bitcoin's available supply has stayed the same in the last month, suggesting that investors are holding onto the cryptocurrency in anticipation of the SEC's approval of spot Bitcoin ETFs. Yusko pointed out the dominance of institutions like UBS and Merrill Lynch in today's financial landscape, controlling $30 trillion. A mere 1% shift of this amount into spot Bitcoin would create a substantial $300 billion demand, powerfully boosting Bitcoin's value. In an interview with CNBC on Thursday, Gensler said that the SEC is considering between 8 and a dozen filings for a spot Bitcoin ETF. As for the hope, Bloomberg analysts peg the chances of approval by January to around 90%. We've got a few clips from the interview. Let's focus on those.
The spot is different in that in the paper world, and this is not just Bitcoin, right? This is true of any ETF in the futures market. Whether it's gold, whether it's silver, whether it's cows or cattle, it can be anything. If you can create a paper thing out of thin air and sell it, you will put downward pressure on an asset. That's how gold has been spoofed for years by JP Morgan. I mean, look, and I'm not accusing somebody blindly. I mean, JP Morgan pays fines every year for spoofing, but they're like, yeah, we made 20, we paid 1. Cost of doing business, whatever.
Good. Yeah.
And so great, but it is different. With the spot, everyone's like, oh, everyone's going to front run it. No. When I buy the ETF in my UBS Family Harmony account, right? I have this Family Harmony account with my brother-in-law at UBS. I'm not allowed to buy anything the day the ETF is approved. I can transfer money into it. That's real money that then they have to They have to create a new share. They have to buy spot Bitcoin. Now, here's the problem. Three-quarters of the coins haven't sold in a year. They haven't traded. We have $8 billion of trading volume every single day. It's the same Bitcoin over and over and over, like a tumbler. A washing machine, not a tumbler like a hider. But the key is that the price is going to rise because the demand is going to exceed supply. That's simple Econ 101. And it could be a big move because 10 billion from GBTC plus Saylor, singing his praises, moved us from 10 to 60 in about 10 weeks. Now we had the end of crypto fall, the Thanksgiving pump, all that good stuff. Okay, great. But this is different. This is real demand that I think could stretch. Look, I think it's going to be 300 billion before all is said and done. That's 1% of the assets held in UBS, Merrill Lynch, all these places that aren't allowed, right? It's crazy. Like if you're Merrill Lynch, not only can you not buy GBTC, they won't even take you as a client if you made your money in crypto.
Bitcoin mining companies have been aggressively investing, dedicating more than $1 billion toward machines expected to arrive in 2024. Simultaneously, reports indicating progress in approving various Bitcoin spot ETFs may have contributed to Bitcoin surging above $44,000 before the anticipated 2024 halving. Feel free to share your thoughts in the comment section below. If you found this content informative, please give it a thumbs up and subscribe for the latest updates. Thank you for being here with us.